If you're about to rent out the house you've been living in, there are 3 insurance mistakes that I see owners make over and over, and any one of them can cost you more than a year of premiums. I'm Guy Garner with Raintree Property Management in North County, San Diego. And I don't sell insurance, which is exactly why I can walk you through this without steering you towards a quote button. Mistake number 1, not telling your insurer. Your homeowner's policy is built on one big assumption, that you actually live in the house. The day the tenant moves in, well, that assumption is gone. The industry's answer to this is a landlord policy, and it covers the structure. It covers your liability as a landlord, and here's the part that owner-occupants have never needed. It can cover the rent you lose while a covered repair is running. Yes, it does cost more, about 25% more is the industry's average, but think about what you're comparing it to. If something serious happens and your insurer still thinks you live in the property, you've handed them a reason to question the whole claim. One phone call before the lease starts makes that problem just disappear. So call your agent and say this sentence out loud. I'm converting my home to a rental. What changes? Mistake number 2, ignoring the gap. See, there's usually a gap between the time that you've moved out and your tenant hasn't moved in yet. The house is empty during the make ready and marketing and screening of the tenants, and an empty house is its own risk category, and a lot of policies just treat a vacant home differently, sometimes for a certain number of days. Every insurance company is different, so I'm not gonna quote you day counts. I'm going to give you the question instead that you want to ask your agent. How am I covered during the weeks the house sits empty between me and my tenant? And then shrink that gap is important. A house that leases in 3 weeks has a lot less vacant house risk than one that sits for 3 months, of course, and that's a big part of what professional make ready and marketing is for. Mistake number 3, forgetting the tenant side. Your landlord policy covers your building and your liability. It does not cover your tenant's furniture, their electronics, or their hotel bill if the house becomes unlivable, if there's a flood or fire or something like that. That's what renter's insurance is for. And in our leases, tenants have to show proof of renter's insurance before they get keys, the same step as putting utilities in their name. So 3 policies, 3 jobs. Yours, theirs, and no gap in the middle where everybody points at everybody else. Now let me tell you what a real claim looks like, because this is where all of it pays off. When there's a flood or a fire at a home we manage, a restoration vendor is on site within hours. We connect the owner directly with the restoration company because they'll help you decide whether it's even worth filing a claim. And if you file, the insurance check comes to you. You pay the restoration companies directly, and the receipts come back to us, so everything is accounted for at tax time. And underneath that whole story is the rent question. If the house is unlivable for 2 months, loss of rent coverage is what keeps your income whole. So when you make that call to your agent, ask about that by name, the loss of rent coverage. The full written guide, including the coverage table you can take to your agent, is on our blog, and the free profit protection kit that goes with it has the compliance checklist for your whole conversion. I'm Guy Garner with Raintree Property Management. Thanks.